So Hudson's Bay closing a lot of its stores, maybe even all of them. What's the impact on Canadian REITs, the landlords for this company? We're joined by Joshua Varghese, corporate advisor and member at Trez Capital. It's great to see you, real estate specialist. So Hudson's Bay, we know that it was years developing this problem. It was bought by essentially US real estate guys. They weren't retailers. And that, coupled with a change in the demographics, I guess, just spelled the end of Hudson's Bay.
Yeah, I actually am quite close to this story because in my former life, in my former role, we were one of the largest shareholders of Hudson's Bay. Through a lot of that saga of really just the kind of the beginning of the difficulties for department stores, the rise of e-commerce, and the specific challenges for the Bay and HPC along the way since about 2015. And so what you saw is, a really strong entrance into the company by private equity several years earlier, where they were able to get really high quality real estate within the corporation at very attractive pricing. And they were able to monetize a lot of it, either the leases or the real estate itself. But as you mentioned, you have to do something with that capital once you bring it back in. So you can sell real estate, monetize, but then you have to reinvest into your retail business, which is the core business of the company.
Right.
And so you had this confluence of flat factors where you had e-commerce rising, as I mentioned, department stores becoming less prominent in malls and people going to them less and less. And you had a real need for technological innovation. And if you add the company-specific issues of too much leverage, too much capital tied up in inventory, and not necessarily innovative and transformative enough, that leads to a lot of problems that I think, COVID really accelerated and was the final knockout blow. And the last couple of years have just been stumbling around until we're at this point, which looks to be unfortunately for many, the final inning.
Is it true? I mean, the US department store industry has struggled as well. Maybe not to the same extent.
Yes, it has. So this, this is not unique to Hudson's Bay. Every department store will have its own story, but we've seen it happen in the U.S. with groups like Nordstrom shutting down department stores in Canada, Neiman Marcus having its issues. In Canada, we've seen Sears closing. We saw Zellers a long time ago closing. Target, who took over the Zellers locations, ended up closing as well. So this is definitely not unique. And I think the advantage, if there is one out of this, that the Canadian landlords have had is that they've had a decade and a half to understand that this is a problem and to reposition their real estate assets accordingly. So Hudson's Bay leaving, while is not welcome news, and it's upsetting for a lot of people and a lot of landlords, it's not something that completely blindsided them. They've been able to see this for several years. Among
publicly traded entities, RioCan and Primaris are the most exposed, but you reckon it's not a huge hit for either of them?
Yeah, and so if you take a look at each of them, so first of all, where are we right now in Hudson's Bay is they're in CCAA and that they're under creditor protection. That happened March 7th. Since then, there's been a lot of back and forth on what that actual plan should look like. They thought that they had a restructuring plan with their lenders, but over the weekend, the Ontario Superior Court rejected that in favor of one of their major landlords, which is Cadillac Fairview, which basically said, the previous plan was one where they were going to be required to close down substantially all of their stores and liquidate assets. And I think what the landlords came back saying was that, well, that is too brash and too rapid, and we need to give the company more flexibility to try to figure things out. I think, none of those details matter too much in terms of the bigger story, which is Hudson's Bay stores will likely have to close in a very substantial way. And so then you look and you say, okay, well, if I'm a landlord, that's a bit of a problem. But let's look at it in the overall context of what it is that we own. So a company like RioCan, who owns they've got about $250 million of exposure through ownership in their joint venture that owns the standalone Hudson's Bay stores. That $250 million is in the context of a $7.5 billion net asset value that they have. So it's around 3.5% of assets. The question is, what can be done with those assets? How much value will be lost? How much money will need to go into those buildings? But in the worst case scenario, you're looking at 3% exposure. RioCan, I think, is down about 13%, which I would argue is overdone. And then if you look at Primaris, they do not own any assets with the Bay, but they are a landlord to the Bay in several of their locations. But again, it's relatively muted. They've got a $4 billion portfolio. I think they have exposure to 10 HBC locations, 5 of which are in their top 10 locations. You look at those locations, they're doing retail sales per square foot anywhere from $600 to over $1,000 per square foot. Compare that to what Hudson's Bay was probably doing in sales at those same locations. It's probably in the $200, $300 range. So there is an opportunity to to replace that space with a much higher performing tenant. It's probably not welcome news to these guys, but I don't think it's anything too detrimental to them. Is
it in any way clear how many Hudson's Bay stores will survive at this stage?
It's not too clear, but based on my knowledge of having dealt with them in the past, I think it's a very few number of stores, and it may be some of those top locations. And when they announced the initial restructuring plan, it was to close all but 6 of them. Yeah. And 3 of those locations were in RioCan buildings. And these are what I would call kind of top tier locations that may have a chance for some kind of survival of the business, but there's a lot of TBD at this point.
Thank you very much, Joshua.
Thank you.
Joshua Varghese is a corporate advisor at Trez Capital.